20146, your SMS line at Metropole TVKE across all your social media platforms. Richie, we're expecting Solomon. Is in the room? Ah, fantastic. That's what we wanted to get from you. All right, now let's continue this morning with the economic review, where in a fresh turn of events, a Kenya Tea Development Agency Holdings Limited, KTDA, has taken an issue with the President Uhuru's executive order ordering elections in tea factories before May 12th. In a case filed before the High Court, KTDA argues that the President has no powers to order the polls of a private company in the executive order of March 12th, directing the Tea Board of Kenya to conduct elections in all tea factories within 60 days. Through their lawyer Benson Milimo, KTDA said, and I quote, "The President has no iota of justification in law or fact in seeking to interfere with the petitioner's lawful business, affairs, and internal management." Before issuing the executive order, President Kenyatta questioned the operations of KTDA's network of subsidiaries, which he said were locked in an inherent conflict of interest and misalignment with the interests of tea farmers. Now let me cross over to a statement that they issued yesterday after they ordered the cancellation of any activity that will lead to the polls or any meeting that will lead to polls within this 60 days. And it comes, they say, and I quote, "The law does not provide for third parties, including state departments or agencies, to convene meetings or privately or publicly registered companies preside over and or transact the company affairs as is being touted in respect to tea factory companies." That is their position. Just before we cross over, let's look at exactly where we are in terms of tea auction prices in the country now in 2021. And if you look at exactly where we are, Q4 of 2020, I would like to believe that is it. Yes. Tea auction prices were on their high as well. If you look at our exports in terms of value and quantity as well, you're also going to say that, well, it has been on a rising trend. Good. Let me bring in Vincent on that as well. Vincent, without really discussing the merits and demerits of the case, under what instance or circumstance can a presidential order be challenged? Because it's now KTDA versus the president as it looks.
Let me say this. You have to always appreciate that, yes, that everybody is under the law. The president took an oath as to be the custodian of the Constitution, to uphold and protect the Constitution and the Kenyan laws. So if it is true factually that there is no legal basis for the president to control companies, then you have to say that true KTDA they have a legal right to get the benefit and the protection of the law. And I'm very happy that they have gone to court to be able to seek that legal protection so that they can benefit from the law, because the law protects everybody, including the president. That if you infringe on the rights of the president, he also has a right to get legal protection from the Kenyan laws. However, it is also good to look at it, this thing, let's appreciate that a country is not only ruled by laws. There are things that society can only move ahead when you appreciate that there are other things that govern a country. When you are discussing the issues of power here, when the economy is not doing well, remember that the very people who are members of KTDA, the farmers, are Kenyans. They are Kenyan voters. So the president has a responsibility if the economy and the problems in the tea sector are not doing well. So my recommendation to KTDA is that as much as you might want to, you might be, let me say this, if you're driving on the right side of the road and a mad person or a bad driver gets on your side of the road. And then what happens? You realize that if I continue becoming right by keeping to my lane, we will have a head-on collision. At times, it pays to just step aside of the road so that the right things prevail. I think they need to look at things from a broader perspective.
Yes.
There have been complaints from the tea farmers, from Kenyans, that the tea sector requires to be straightened. So the intervention by the president is also informed by the realities on the ground. So for me, my advice to KTDA as a governance expert is that look at the broader issue. When you take on a president who is trying to bring order into a sector, the other time you have to change tact. Running to court might not be the right strategy. So on this one, I think KTDA might be legally right,
yes,
but they are politically and economically wrong. And I can tell you, at the end of the day, they are the ones who might actually suffer in the process. So they need to look at the broader issues that are being tackled. Elections are approaching next year. And you remember that politicians want to go to the ground and say, hey, tulifanya kitu, ni watu ya KTDA waliharibu maneno. Let me tell you, where will they have to protect themselves? So on this one, KTDA, they need to go back to the drawing board.
Yes, Vincent, I'm going to come back to you later on the plans. I mean, it looks now more obvious than ever that, well, the state wants to take back KTDA. Fine. But now let's continue with what KTDA is saying before we bring in the man in question. Good. Now, they continue that in this point, the law does not provide a line minister, and in this case, the CS Agriculture, with the authority to interfere in privately owned company affairs, such as those of tea factories. Should this be the case, then no privately owned company in Kenya would be safe from unlawful external interference. So what does Munya has to say about this? Let's take a look.
Factory companies that will be doing elections, there could be confusion if we don't support them in terms of suggesting dates in which they can call for their extraordinary meetings. To help us comply with COVID-19 rules, Murang'a have already done, and they're having their meetings tomorrow. I've seen the social media. In fact, this is what necessitated this press conference where people in KTDA state management say those meetings are fake. They are not fake. They are properly convened by the shareholders of those factory companies. And we are asking the other companies to follow what Murang'a is doing.
All right, at this point in our conversation this morning, slightly as we continue with our discussions this morning, let me introduce Solomon Kabuki, who is an investment analyst. Solomon, they want to take KTDA back. I mean, it looks more now clear than ever. And CS has actually mentioned it. Because if you listen to that, some of the factories are already conforming. KTDA is over this other side saying, well, don't conform. We're still waiting to give you further directions after the case that is in High Court is already listened to. And we do expect that that case is going to be tabled today. Is that what is clear now, that if the state is worried about the cries of the tea farmers in the country, then what they are trying to do is chart a way to take KTDA back to the government? Is that what it is now?
Well, thanks for having me. For me, I look at it as an opportunity for the government to streamline what is happening in the tea sector.
Yes.
So you find that there's been challenges in the tea sector, and the farmers have been complaining that they have been undercut in terms of we're having brokers and people who are the middlemen, the in-between people who have been there in between now the farmers and KTDA and the market. So I think the government is trying to react to what the farmers are complaining about, not getting the fair end of the bargain. And I think it's just a move to try and I think it's a responsibility of the government to make sure the citizens are happy, and they're just trying to maneuver in ways of which they can try and make and see where things can be streamlined, and the complaints maybe from the farmer side can be dealt with, or they can calm down.
Pretty much. Let's go back to Vincent this morning. Vincent, to what extent will holding elections at the tea factory help reform KTDA as the government intends?
John Maxwell says everything rises and falls on leadership.
Yes.
Even the first session of this discussion, we were discussing about leadership. So it tells you that possibly that there've been conversations and discussions to reform and to bring order into the sector, and it has been stalled by the current leadership. And you can see clearly, even the decision to go to court is a leadership decision. So it tells you that if you're a football fan, now I think we can talk about football here, because football has been used as transformed into business, particularly in the EPL. Look at the changes. What is it? The former Frank Lampard was struggling at Chelsea. Immediately they brought a new coach. They are on their way to the round of 8. The last. So what is it? They're on the last 8, which is in the quarters of the Champions League. What I'm saying is that you cannot underestimate the place and the role of leadership.
Yes.
In fact, even this program itself that we are having today, your leadership is what can evoke a very good and a heated and a very fruitful conversation.
Yes.
Or you can actually have a boring discussion that people are waiting for the time to end. So the point is, you have to appreciate what leadership does. And since the framework for getting a better governance in the sector is through new elections, and then you have to trigger the button and get people to elect a new leadership, so that you have, when you have a new leadership, what happens? A new leadership brings new energy. A new leadership brings new perspective and passion.
Yes.
So for me, anything to improve and to strengthen accountability should be supported. And particularly knowing that at the end of the day, if you want to have leadership, and you are currently part of the process, just offer yourself. Don't stand in the way of progress. There is time for everything, and that's why, as I said, that KTDA might be legally right, particularly going to court, they can get an award. But at times, is that really the best option for the sector? Anyway, that for me would be how I see it, that and the impact and the place of leadership in this conversation.
Pretty much. All right, gentlemen, let's move into the last conversation this morning. Well, a report by Business Daily indicates that insurance group Britam Holdings plans to sell part of its 48.2% stake in the mortgage financier HF Group in what is viewed as a shakeup in its investment portfolio by selling its stake to one of the top banks in the country. A director who spoke to Business Daily indicated, and I quote, the plan is to have one of the big banks acquire majority stake in housing finance and run it. The partial exit from HF is to allow Britam to focus on its core insurance business. And quote from the director, who asked for anonymity, and further said that Britam could retain a small stake in HF, with potential suitors seeking to ride on a HF to grow into the mortgage market segment. Now, HF is ranked second in the residential mortgage business, having lent 33.7 billion to 4,717 house buyers as of December 2019, according to Central Bank of Kenya data. KCB is the leader in the segment, lending 64.3 billion to 8,404 customers over the same period. Good. Let's take a look at exactly where HF is in terms of the performance as we go through the effects of the coronavirus pandemic. I can actually see that, and the biggest announcement from that is the announcement last year that they were actually dropping the brick and mortar construction of houses in the country just to go into the marketing and financing segment in the real estate sector in the country. Moving on to another area really in terms of their selected key performance indicators. You can actually see that in terms of their lost profit after tax and also their profit before tax. That's a big conversation point because, as you can see, it is in the red. Solomon, is this Britain trying to reduce its exposure to real estate shocks under the COVID-19 pandemic? Is that how we read into it? Because again, we do know that Britain is also coming from a loss-making year.
Well, thank you once again. So if you look at the Britain situation,
yes,
it can partly be seen as an exit into the real estate sector, and also partly attributable to the changes that the companies are undergoing right now.
Yes.
So there's been other announcements like the scrapping of director positions or executive positions that they had. And also, I think for them, they're trying to streamline their business because they see themselves as more of an insurance company than maybe a conglomerate. But then again, you have to look at it in terms of the entire insurance industry. So you find that this has been a trend in the insurance industry, whereby some of the big players have been scrapping off businesses that don't make sense to them or they're not profit-making.
Yes.
So if you look at the premiums in the industry, they have been flat over the last few years, and so the only other line item that they can use to maybe expand is to grow their investment income. So you find that they're trying to look at any investment asset class that is not performing for them is just scrapping off, so that they can ensure that they remain profitable.
Yes.
Because if you look at even in the last, I think half one 2020 results, the biggest loss was contributed by the unrealized fair value losses in housing finance. So for them, it's just a business move to realign their investments.
Yes.
In as much as the investment now coming in the real estate sector.
Solomon, how do we understand this move from Britain? Because we do know also that Housing Finance announced a change in the market strategy where last year they said, well, we're not going to go into construction of real house units. The only thing we're going to do is go into financing and marketing as well. You like to think that maybe Britain would have waited for the market to react in that change of strategy from Housing Finance, but it looks as if they did not wait.
Well, if you look at what happened in September last year, there was the coming into effect of KMRC, Kenya Mortgage Finance Company, where housing finance is a key player into that. So I think for housing finance, as part of their strategy, then they are trying to look at now as doing away with construction, the brick and mortar, and now focusing on lending using KMRC as a tool or as an avenue for them. So I think. The executives at Britain know it best on why they decided to exit now or why they're deciding to exit now. But again, as investors, as retail investors, then they can always wait out and see what the move will do. Because I think KMRC is supposed to, in our opinion, KMRC is supposed to bring in a lot of lending or is supposed to boost lending in terms of mortgages in the country because mortgage uptake in Kenya is quite low at the moment.
Yes. Solomon, I'm going to come back to...
Also to add something is that KMRC is also meant to fund affordable housing. So you find the drive right now is on affordable housing. So you find that now KMRC, where housing finance is a key player in, and I think also housing finance hopes to benefit from that is that it's aimed to increase the mortgage uptake in the country, which is now going to the purchase of affordable houses. Yes.
Vincent, let's talk about that as well. I mean, the biggest announcement from that exec who spoke to Business Daily on anonymity is that, well, we do expect that a bigger bank is going to buy into that stake. You like to think that maybe, again, banks would now say, hold on, into investments in real estate, which was among the biggest ones in terms of the exposure to non-performing and bad loans during the coronavirus pandemic, but likely not.
I think there are three things that the announcement from Britain can help us understand this. The first one is that when there was discussion around the control of the interest rates in the banking sector.
Yes.
If you look at the contribution of the profits to the banks, you realize banks were mainly getting interest from a big part of their profits was from the interest they charge. And you also looked at the business that mainly banks are focusing more
Yes.
on lending to governments because of security. And therefore, this is part of the diversification framework that you see in the banking sector. The second part is that you notice that in the banking sector, there's been a journey towards consolidation. So the takeover of NBK by KCB, the merger between NIC and CBA, telling you very clearly that the scale is the focus, gain from efficiency, machines, and also as in better position yourself in the market. And then finally is then new opportunities and new spaces. So there is the mortgage space. And when you see that statement, a big bank telling you very clearly, it's just not any other bank. It's a bank that has experience in the sector. So it is also a strategic communication. A big bank, it's a bank that's already in the sector that
Yes.
wants to consolidate better and to also deepen its income and profits by working with what is already tested. HF has a good experience in the real estate market, and so they will be building on what is already working, and to consolidate its position moving forward.
Yes, Solomon, clear for us this conversation though. I mean, we're talking about the lowest insurance penetration in the country right now, again, hit heavily by the COVID-19 pandemic, and yet you have Britain saying it's a company that's coming from a loss-making year, and they're saying, well, we want to focus on our core business. But if you analyze the insurance industry right now in the country, core business is not really clicking, is it, Solomon?
No, as I had earlier said, you see, the premiums are not growing; they're
Yes.
flat.
Yes.
For the companies, they're flat, and Britain being a key market shareholder, then you find that they're also affected by that.
Yes.
So what the insurance sector has done, or what the companies are doing now, they are looking at the other line item. Remember that the insurance business is mainly driven by the profit and loss account, or the statement of or the income statement. So the main growth comes from the premiums and from the incomes that they get from the investments that they have. So now, if the investment bit is not working and the premiums are flat, then the business has to look at other ways of realignment. And the most or the low-hanging fruits are the non-performing investments or non-performing asset classes.
Yes.
So I think that's the reason behind the thinking that for us or for Britain, then since there's a way they can look at growing premiums, then they can always shed off whatever investment is not working.
Yes.
And again, another industry trend is that most of the insurance companies are now going digital. So I think there's an opportunity to reduce the cost of doing business because by going digital, because you'll find that you'll be able to reach more people. They'll be able to reach more targeted market because you can easily place an ad on social media platforms and you can target the market that you want. And they can sign up online, they can pay their premiums online, they can do their claims online. So that will come with its own added advantage in terms of cost reduction. So as the business moves, then they're trying to look at better ways of mobilizing premiums and also shedding off investment asset classes that do not work for them. Yeah.
Pretty much. Solomon, Vincent, thank you very much for joining us this morning here on A Business. You gentlemen have been quite invaluable. Thank you very much again.
You're welcome and good day.
All right, pretty much. And on that note, that is the Tuesday for you from us. Good morning.
Okay, thanks.